U.S. sanctions on Iran, a tool wielded with considerable force on the global stage, are a cornerstone of American foreign policy, a key instrument in Washington's diplomatic arsenal. These measures are not taken lightly, but are considered vital for national security interests, aimed at curbing Tehran's nuclear ambitions and regional influence. The United States seeks to prevent Iran from developing nuclear weapons and destabilizing the Middle East. The 2018 reimposition of sanctions, a pivotal moment in the relationship between the two nations, after the U.S. left the Iran nuclear deal, marked a significant escalation in economic pressure. This decision reversed years of diplomatic efforts, targeted Iran's vital oil exports, the lifeblood of its economy. By choking off oil revenue, the sanctions aim to cripple Iran's financial capabilities. The U.S. hopes to limit Iran's ability to fund proxy groups and missile programs. These are seen as major threats to regional stability. These sanctions don't just hit Iran, they have far-reaching consequences. They threaten any country or company trading with Iran's oil sector, creating a complex web of international compliance. Forcing a choice between U.S. markets and Iranian oil, a difficult decision for many global players. Iran, however, has adapted, demonstrating resilience in the face of adversity, using covert shipping tactics to keep oil flowing, circumventing the restrictions imposed upon them. The Biden administration enforces sanctions, continuing the policy of economic pressure, but often treads carefully to avoid spiking global oil prices, a delicate balancing act. This balancing act shows the challenge, the inherent difficulty in wielding economic power. Isolating Iran without hurting global markets, a complex and multifaceted objective. U.S. sanctions ripple worldwide, impacting economies and political landscapes far beyond Iran's borders, shaping energy prices and international relations. The long-term effects of these policies remain to be seen. 3. China is Iran's economic lifeline, buying vast amounts of Iranian oil despite U.S. sanctions. Chinese refineries, especially smaller teapots, discreetly import Iranian crude, often rebranded to hide its origin. This shadow trade keeps Iran's economy afloat and gives China cheap energy. The U.S. occasionally sanctions Chinese firms, but enforcement is inconsistent. Washington fears a crackdown could spike oil prices. China's defiance is both economic and geopolitical, signaling independence from U.S. policy. This ongoing trade is an open secret, fueling tension between Washington and Beijing. The result, U.S. sanctions are undermined, and China deepens its Middle East ties. In June 2025, Donald Trump floated a potentially game-changing idea. If re-elected, he'd essentially greenlight China's purchase of Iranian oil, a move that flies in the face of current U.S. policy. This would represent a significant shift in how the U.S. approaches both Iran and China. Trump argues that the existing strategy of trying to block China's access to Iranian oil hasn't yielded the desired results. He believes that these restrictions have been ineffective and only serve to exacerbate already strained U.S.-China relations, creating unnecessary friction between the two global powers. He claims that allowing this trade to occur openly would inject stability into the volatile global oil market, potentially leading to more predictable prices. Ultimately, he suggests, this would translate to lower fuel costs and provide a direct economic benefit to American consumers at the pump. This signals a departure from the traditional U.S. approach of using economic sanctions as a tool to influence and modify Iran's behavior on the international stage. Instead, the focus shifts towards prioritizing overall economic stability and potentially fostering growth through trade. It also suggests a move towards establishing more pragmatic and transactional ties with China, even on sensitive issues. Trump's approach seems to acknowledge the reality that oil flows are difficult to completely control, regardless of sanctions. It suggests that the U.S. should accept this reality and attempt to leverage it to achieve broader strategic and economic gains. It's a clear break from what has been a fairly consistent bipartisan approach to Iran and China policy for many years. This policy favors a more transactional approach, prioritizing specific deals and outcomes over ideological confrontation. Critics are quick to point out that this approach could concede valuable leverage over Iran and its nuclear ambitions. However, supporters argue that it represents a more practical and realistic assessment of the situation. Ultimately, the proposal reframes U.S. strategic goals in the Middle East. It places a greater emphasis on economic considerations and stability, potentially at the expense of long-held ideological principles. Officially, allowing China to buy Iranian oil would have a ripple effect across the globe. This decision isn't just about barrels and prices, it's about geopolitics and international relations. It would undoubtedly boost Iran's struggling economy, providing much-needed revenue to its government and potentially stabilizing the nation's financial situation. This injection of capital could lead to easing its isolation on the global stage, allowing Iran to re-establish trade relationships and strengthen its position in the international community. The immediate impact on the oil market would be significant. Global oil supply would rise, likely lowering prices for consumers worldwide. However, this price drop would hurt other major oil producers like Saudi Arabia and Russia, impacting their economies and potentially leading to internal pressures. The dynamics within OPEC, the Organization of the Petroleum Exporting Countries, could shift dramatically. With increased oil revenue and a stronger economic position, Iran could gain more influence within the organization, potentially challenging the existing power structure. U.S. allies such as Israel, deeply concerned about Iran's regional ambitions, and Saudi Arabia, a longtime rival of Iran, might see this move as a betrayal of their strategic partnership with the United States. This could lead to straining old alliances and forcing these nations to re-evaluate their relationships with the U.S. On the other hand, the move could reduce U.S.-China friction, potentially opening doors for further cooperation on other global issues. However, it could also weaken U.S. leverage on Iran's nuclear program, making it more difficult to negotiate and enforce restrictions. Critics warn that, emboldened by increased revenue and reduced international pressure, Iran may accelerate its nuclear ambitions. This could happen sensing less international resolve to maintain sanctions and diplomatic pressure. Ultimately, the trade-off is between short-term economic relief and potential long-term consequences. It's a gamble involving long-term security risks and a significant shifting of the global power balance.